All right, let's dive right into something pretty fascinating today. We're going to break down a very, very specific financial prediction. We're talking about the price of gold way out in January of 2026. And it all comes from a method that tries to blend ancient astrology with, believe it or not, quantitative analysis. So how on earth does that work? Let's find out. And there it is. That's the number this is all about, plus 7.22%. It's not gold is looking good or we expect about a 7% gain. No, this is a super precise forecast for a minimum gain of 7.22%. When you see a number that specific, you just have to ask, where did it come from? So here's the full claim, straight from the source material. I mean, wow, that's a bold statement, right? It sets a really clear time frame, a start and end date, and a mathematical floor for what the price is going to do. So the big question for us is, how could anyone possibly calculate something so specific so far in advance? To figure that out, we're going to break this model down piece by piece. First, we'll look at the prediction itself. Then we'll get into the cosmic engine that supposedly sets the timing. After that, we'll check out the sniper scope that targets gold specifically. Then the big one, how the number is actually calculated. And finally, we'll explore this interesting idea that this might be connected to more conventional market theories. Okay, so just to be clear, our goal here isn't to prove or disprove this claim. It's to deconstruct it. We want to really understand the logic and all the different parts of the system that came together to produce it. So first things first, why January 2026? Of all the months, all the years, why that one? Well, the model's timing isn't random at all. It's based on what the source calls a cosmic engine, basically a rare and apparently very powerful planetary alignment. And this is the event. It's called a Makar Sankranti Stellium. According to this model, this is the moment when the Sun, which is symbolically tied to gold, and Mars, which represents energy and action, they come together in the sign of Capricorn. Now, what's really interesting here is that in Vedic astrology, Mars is considered exalted in Capricorn, meaning it's at its absolute maximum strength. So its effect is supposedly supercharged. And this timeline really lays out the key dates for us. So the model starts by setting a baseline, the opening price of gold on January 2nd. Then, boom, mid-month, between the 14th and 16th, that planetary alignment happens. The model describes this as an injection of heat into the market. This is the trigger, the event that's supposed to kick off this explosive trend, with the 31st being the target date to see that predicted price jump. Now, to make this whole thing a little less abstract, the model uses this great analogy. Think of it like this. The Sun is the king, and Mars is the commander of the army. And what are they doing? They are meeting up in Capricorn, which represents the house of Earth and resources. So the story here is pretty clear. It's about incredible power and decisive action being focused squarely on tangible assets, like gold. Okay, but a big cosmic signal that says something's going to happen with resources is still pretty broad, right? Lots of assets could be affected. So how does the model narrow its focus from this huge event down specifically to gold? How does it filter that energy? Well, it uses a tool called the Sarvatobhadra Chakra, or SBC for short. You can pretty much think of it as a high-precision targeting system. It's this ancient, complex grid that maps out all the relationships between planets and very specific stars. And here's the key. Certain stars are believed to have dominion over specific commodities, including gold. So here's how it works in practice, step by step. First, the model identifies the specific stars that are linked to gold. Then it checks for what it calls a Vedha, or a piercing ray. It's basically confirming if that supercharged Mars is firing a direct line of sight, a direct aspect, onto those gold-related stars. If that connection is made, if the ray hits the target, it's interpreted as a war signal, which predicts a sharp, sudden price move, often driven by things like fear or geopolitical tension. All right, so we've got the when, January 2026, and we've got the what, gold. But that still doesn't explain the most fascinating part of all this, the exact percentage. That brings us to the final piece of the puzzle, the actual calculation. Let's just ask the question head on. Predicting a general direction is one thing, but pulling a number like 7.22% out of thin air, that's something else. It has to come from a quantitative input, right? So where is it? And here's the final piece of jargon. It's a concept called Vimshapaka Bala. All you need to know is that this is basically a scoring system. It's designed to quantify a planet's strength and overall quality in any given situation on a simple scale out of 20 points. And in this particular model, it's the high score of that exalted Mars that provides the key number for the formula. And this is where it all clicks together. It's actually pretty straightforward. The model takes the baseline price from the start of the month, it applies a multiplier that it gets directly from that high Vimshapakata Bala score for Mars, which it calls a volatility index, and the algorithm spits out a result, a minimum price deviation of positive 7.22% by the end of January. Now, I get it. This entire system probably sounds incredibly esoteric, maybe even a little out there. But what's really interesting is that the source material draws a connection from this ancient system to practices that are, while definitely niche, a lot more familiar in the world of finance. The source draws its really direct parallel between the Vedic method and what some traders call GAM theory or time cycle analysis. It makes the argument that some hedge funds have been quietly tracking things like the Sun-Mars cycle for decades. They know that when these two planets meet up in what's called an Earth sign, commodities tend to move. So, the suggestion here is that both of these systems are really just tracking the same underlying cycle. One is just the ancient data source, and the other is its modern-day application. So just to do a super quick recap of the logic we've walked through, the model uses a specific planetary alignment as a trigger for a time window. Then it uses that Sarvatobhaja chakra tool as a filter to pinpoint gold as the asset to watch. And finally, it uses the Vimshapaka Bala scoring system to actually calculate the magnitude of the move, which is what gives us that plus 7.22% number. And that really brings us to the end, and it leaves us with a pretty deep question to think about. Are the patterns that we see in financial markets a reflection of some kind of predictable cosmic clockwork, like this model suggests? Or are they just the chaotic, unpredictable result of mass human psychology? It's a really fascinating debate about what truly drives the cycles of fear and greed in our world. Thanks for joining me on this one.